Our next witness is Ms. Zola Finch. Ms. Zola Finch is the Director of Finance of RMI CDC based in Jefferson City, Missouri. Thank you for coming. Ms. Finch is testifying on behalf of the National Association of Development Companies, the leading trade association of certified development companies, which administers the SBA's 504 CDC program. Welcome to the committee.
Good morning. My name is Zola Finch, and I'm the past chairman of NADCO, and I'm pleased to provide a statement about our industry's proposals to improve access to capital by small businesses. I would like to thank Chairman Schrader and Ranking Member Buchanan and the entire subcommittee for continued support of the CDC industry and the 504 program. The subcommittee has worked closely with SBA and our industry to ensure the availability of this program to small businesses for many years. First, I'd like to discuss the need to reduce the cost of the 504 program. SBA has informed us that the 2010 budget increases the cost of the 504 program by 38.9 basis points. This is due to at least two factors in SBA's econometric model, the national unemployment rate and the forecast of the 504 default rate. With both of these factors being impacted by the current recession, but the effect is expected to be short-lived, we ask the subcommittee to support an appropriation sufficient to offset the fee increase for the next 2 years as small businesses return to a growth mode and improve their cash flow. We request this to be taken up as soon as possible in order to change the impact of this subsidy fee increase on our FY 2010 borrowers. It does not seem right in this economy to provide small businesses fee relief in the stimulus bill in February of 2009 and turn around and increase their cost of borrowing in October of 2009. Second, we need to reach out to more small businesses with new capital. Congress and the Obama administration have worked hard to put more fixed asset financing and working capital into the hands of small businesses hard pressed by this recession. However, our industry believes that more should be done quickly to have added impact on small businesses that can create the jobs needed to pull America out of this recession. We believe that many small businesses either need access to larger guaranteed loan amounts or have already used up their allocated maximum under the current 504 law. The current restrictions can be addressed in three ways. First, to increase the maximum 504 debenture beyond its $1.5 million limit. Second, to allow a borrower to maximize the use of both 504 and 7A loan limits. And third, eliminate the regulation that restricts business owners with higher net worth from participating in the 504 program. Next, I'd like to comment on the need to reduce loan losses with more effect devoted to the loan liquidation and recovery process. At Congress direction several years ago, SBA created a new regulation that enabled taking advantage of recovery expertise within the CDC industry. Many CDCs already perform these tasks for other loan programs that they administer, but CDCs have not been given the ability and freedom by SBA to do this on a broad scale. NADCO believes that losses can be reduced if CDCs perform recoveries and seek settlements from loan guarantors of 504 projects. NADCO also recommends other program changes to reduce loan losses. We should make the program more flexible in allowing higher owner equity injections to reduce the high cost of first mortgages. If we reduce the overall cost of borrowing, we enable small businesses to save more cash for working capital. Also, we need to make the SBA programs more relevant and productive. Loan volume for both 504 and 7A has improved slightly since the passage of the Stimulus Act, but many of those benefits have not been yet implemented by SBA. Both programs are still down around 50% from levels 2 years ago. Part of this volume loss is clearly due to small businesses pulling back on demand, but a substantial part could be due to SBA and even our own lending industries failing to respond to the ever-changing need of the small business financing world. Both the SBA 504 and 7A programs are over 20 years old, and with an environment of restrictive and overbearing regulations having evolved within the federal bureaucracy, with the new administration and fresh thinking from senior policymakers, NADCO sees an opportunity to break out of the old program's restrictions and bureaucracy. We see the chance to work with new leadership teams and with the new Congress to expand program benefits to more borrowers. And with that expansion comes more jobs. NADCO believes the first step in the process of expanding and enhancing the 504 program is to clarify the structure of CDCs that deliver the program in order to ensure an enhanced level of services by CDCs. We thank the subcommittee for considering several program changes that will increase the focus of our industry on community development through our CDC nonprofit organizations in future years. We also thank you for developing legislation to more tightly define the security that funds the 504 program. SBA has become one of the largest economic development agencies in the federal government. By leveraging its guarantee authority in lender industries, SBA has directly assisted in the creation of over 5 million jobs through more than $200 billion in 504 first mortgages, 504 second mortgages, and 7A guaranteed bank loans. But like any maturing agency, SBA has to reevaluate its products to serve the changing needs of small businesses. NADCO encourages Congress to collaborate with the new SBA management and lenders to tear down those restrictive walls and create the financing and economic development programs vital to America's future. Small businesses that are healthy and successful will lead us out of this recession. Let's help them now. Working together, we can get America working. Thank you.